Okay, so we have, hold on, that's not the day. All right, so we have a trend line here. Take that, extend it. You can also, I have else to measure it. I would probably take this, right? So that's what I'm looking for. But really that wasn't the one. So we actually found an area of interest all the way from, let me do that so that everyone else can see it. Put that in there. This gap. This whole area. Or you can tighten it and just from here to there. But I'm going to take the whole area. Okay. If you take the whole area, then you can tighten it by yesterday's price action, the edge of the body. Now you're in the buy zone. You see how this became a buy zone and why we reversed back up? It's because the prior days we have narrowed that large zone. Bears ate into that gap and then is reversed back up. So today we opened below the moving average. Very strong bear bar. It's looking for a support. It's selling, but you do have a low of yesterday, so market comes down, moves underneath low of yesterday, but you're right at the 50% of the gap zone. It's a buy zone. Okay, so if you did sell, this is what I would do. Maybe you put your stop there, is right. That would be my 2R target, and I would leave this on the table. Or you could just, this is a much better measurement. Then you get a measured move and a half. Still, you can't get to the 2R. So that means if the market is not getting to the 2R, if you measure it this way you get it. This is the only way I do. And I don't care about this. I will scalp that. Knowing that I'm in a buy zone, none of this matters. The low of bar 2 and 3 does not, I don't care about it. I just take my 2R, I am done. Market reversed very strongly. It's overlapping with 2.5 bars, 2, 3, and half of bar 1. So if you are still short, you're done. You have to exit. This is probably going to get back up. This is a recovery. It's going to try to close this right here. Because 50% of the time, whatever market is going, it's probably in the wrong direction. It's going to reverse. It could be first 3 bars, 2 bars, 5 bars, 6 bars, or an hour. It'll eventually reverse. So you only got 15 minutes and then it reversed, right? I think there was a news or something. I don't care. So we go bar 1 high, right? And now we have this leg up, right? All the way to here. Market comes down, or you can count this like up, right? Pulls back. That's a double bottom bull flag, implied bull flag, and then you can buy, right? So it's a spike pullback, so I'm looking for at least 3 pushes up before I see the bears showing up. So I have 1, I have 2, I have 3. So when they sell, they're probably going to come back down here. But more bars that we close above the moving average and we close this gap, pretty much bears are done here. Anytime the bears are actually printing a very strong bear bar, we're getting inside bars or sideways and up. No continuation for bears. And we have a gap here, right? And market wants to probably go somewhere. Where is that somewhere? That somewhere is here. There's a gap here. This bar, we did breach above it, so somewhere around here, there's a breakout test area. Right? That's the first sell. That's the second sell. Now, I don't like to do the first sell, but if I do sell with a limit order here, I'm going to take profit at the moving average. Okay, that's about it. So, but I'm looking for a swing sell. Okay, bar 23 is all right, but before then, you had a bull bar. And now I'm not getting a second bear bar to confirm that I can sell and swing. I cannot sell this. Bulls are still buying. I need this maybe. Okay, so now I have another wedge top. 1, 2, 3. 2 bear bars is now I want to sell. Okay, this is maybe a better sell. This was the resistance. Maybe this is a better sell. Risk reward is better. Maybe I could put my stop there or here is above this resistance and sell. I don't like the way the bar 29 closed, but it needs a second leg down. Bar 29 is not all that great, even though it's the second consecutive bear bar. It's got a lower wick that's pretty strong. And now is bulls bring it down, but this was still a bear leg with bar 30, but then closed bullish, so we are now in the pullback. So this is a leg 1, this is a pullback. We still need a second leg. If I sell here and put my stop here, I want to sell the close. I'm sorry, the open. And I told everybody on Discord, I'm selling there. And look what happened. People were like, oh, I think we're going higher. No, we're not. You need, look, bulls got 2 legs right there. Bears need 2 legs right there. I actually sold and scalped. All right, so we do have what seems like a bull flag, but we're in a trading range, right? Look at this. Big up, big down, big up again. It's not big up, but it's up. So it's maybe a leg in a trading range. And I'm seeing a bull flag here. What happens to the bull flags at the top of a trading range or the upper third? They fail. They do not break out. So now if I buy above this bar, they're going to slap you down. And they did. It just, look, if this was a bull bar, okay, maybe there is a chance we could get above this, maybe test here and then come down. No, that is not a bull close, bar 36. Good bull bar is maybe good, well, how do I say this? Is maybe context is good, but location is bad. So now it's coming down. Even the context is not good at all. So you have a bad context and a bad location equals failed bull flag. Now it's coming down. So now I'm counting, okay, maybe leg 1, leg 2, leg 3, right? And it actually extends down. Remember this right here? You had a spike. Maybe that is the spike, that is the pullback, and that is the channel up, right? Why? Because this is a breakout and a follow through 2 legs more. So this is your pullback bar. So how do you trade this? If they're selling, what are you going to do? You are looking for market to test its high, tests its open, and test its low. We test the high, we test the open, still they're closing bear bars. Clearly, they're trying to come down and test the low or the close of 11. Look at this bar, 49. It came very close to the close of 11, but it couldn't go any further. It couldn't sell more. Because if it were to sell more, it would have actually vacuumed down. If bar, this bar, or that bar, 48 or 49, were to come down right there and close the bear body, it would bounce and then vacuum down. It didn't happen. So these bears who sold higher and higher, breaking even, but not getting a full break even. When I see one side, they try so hard but can't get full break even, meaning their original contract does not make any money, that means those guys are going to be quick to exit and the bulls will come in. So that means is I have some kind of a trading range here. We're testing the low. So there's a bear flag here, and that bear flag failed. Just like the bull flag at the highs, now the bear flag is failing. There's a big trading range. I kept saying there's a small trading range inside a bigger trading range. This is also the 50% halfway down, okay, 50% of the entire day. Well, let's measure it. Let's not make up stuff. So here, that's today's high, and that is right there is the 50% pullback. So upper trading range, lower trading range, the one big trading range, happens to be 50%. Bear flag failed. So now we have a bulls buying for the second time. I'd buy. I actually bought here. Oh no, I didn't buy this. I missed this. This I missed. I bought later on. I did not buy this. I bought here. I wanted to buy this. And I actually talked about is market either going up above the moving average here. Instead, it closed the bar below the moving average, bar 48. It did not close above it. So that means this bar, 42, is looking for two legs, right? So it goes up, right? That was leg one, leg two. 45 came down, took it slow. That's your first leg. Goes up. Bulls cannot close above, so that means you're looking for a second leg, comes down. But it cannot take out the 45 low with a bear close, then the bulls close, that's it. So what are you looking for? If we take out that high with bull close, you should be looking for several bars up, several legs up. Here's up, pulls back, you should look for another leg up. Oh, we got one. See, this is where I entered. I was looking for a breakout, but it didn't come, so I kept buying and scalping, buying and scalping. And then here I had to buy again at the, where did I buy? I think I bought the close of this bar or something. No, maybe it was here. So I did break even somewhere here and exited out. And I bought again because of bar 70. I think I bought bar 75 or something. And I scalped and exited, and then bar 77 happened. I was not in here in the market. So all the way up here, I traded and then done. So all in all, it's trading range trading behavior, and 50% of today held it. So that was resistance, that was support, and it's really channels, bunch of channels up and down. You can also trade with channels. Right, so here's a channel. Channels are cool if you know what you're doing. Okay, so here's a rough channel, right? And let's make it little. We have a breakout of the channel, probably it's going to collapse back, either to the 50% or to the low of channel. Come down to the low of channel and bulls are buying, close a bull bar 19 above the mid channel, you should go long and target the upper channel. We're not getting any breakout, we're going sideways, we close below the mid channel, we're probably going to test here. But now we are actually breaking below the channel. So now I have a new channel, right? So maybe I can, channel was originally like this, right? And so now look, goes up above the 50%, expect a test of the high of the channel. Cannot close a bull bar, so it's not going to go and test the midpoint of this channel. If this bar 36 was a bull close, bulls would have brought the market back to the mid channel line of the prior channel, big channel, but it failed. So now it's probably coming down. Now what? It broke, so it's coming down. Where is it going? I don't know. So what you do is you redraw your channel, take that, maybe take that, right? So you're looking for bears to move below the mid and then you just sell. So it's kind of a swing, right? It's going to that low. And then now you have a new so and so. You don't need these as well. So market cycle goes up, sideways, comes down midday, and it's going to reverse back up. You can also use break, sideways, down, right? So break, sideways, down. This and this. Break, sideways, cannot sell. I cannot sell this. Break, sideways, and up, so I can buy it. Break, sideways, down, I can sell it. And then break, sideways, up, I can buy it. Break, sideways, it's not coming down, I cannot sell it. Okay, then I take this, maybe these lows. Is this a break? Yes, sideways, but it's not selling. It's going up. I cannot sell it. So you want to see a break sideways and then a sell signal bar, then you can sell it. If you want to buy, right? If you want to buy, let me see. Break sideways, you want to see a bull close. Buy and target those highs. And you'll make money. All right. Carried away there with this was nothing but limit order markets. It started as a stop order, then with the bar 3 turned into a limit order. So is because we're having a gap here, bulls will probably gonna buy, but they're in a scalp mode. So they buy, they scalp at the prior high, maybe they hold a runner. Okay, but all this is a limit order market behavior because you're in a trading range. And there's a small trading range. Okay, so until you get a breakout, you cannot buy the close of bars. Look, you got up, you got down, you got up, so there's a limit order market here. But then we have a breakout, right? And now you can buy. They're buying the close of the bars, so it's going to get a breakout. Now you have another, right? So you got big up, you got big down, sideways, you're in the middle of a trading range. You got up, but it's still not going into a stop order market. It tried to go there, but it failed, and it comes back down. So it's limit order here, a little bit of breakout, limit order here, little bit of breakout and fail. This is not even a breakout, and it just comes back down. So the whole thing is a limit order market. Now we have a limit order market turning into a stop order. Break, sideways, now we're getting sell. So you can sell it. Take that, project it down, and go for a measured move or two. So if you actually measure from there to there, body to body, that's the 37 is the first breakout. That's 1R. Well, they came very close to the 2R. Okay, so almost, but almost doesn't count. But they did get very, very close. If you take edge to edge, that's your measured move target. You can also take this whole thing trading range. That's your measured move target. You are done before it goes up. All right, another trading range. It goes back into the limit order market, right? Find the limit order. Find the trading range. I like to exclude the wicks. I take the bodies, right? So you can see limit order market sideways, right? You could sell from the high upper third, buy from the lower third. Oh, we have a breakout. Okay, that's great. So now I'm going to project it. We have a breakout with bar 52. I want this target. Why can I not get it? Why am I not getting that target? Well, let's now measure from edge to edge. We have a breakout because we just tested the midpoint. It was a scalp, so we're not getting there. Why? Because you're in a trading range. But it pulls back to the 50% and the lower third, and the buyers showed up. Buyers probably want to get there, but we ran out of time. Market ran out of time. That was 57.7. We actually got there. Here is the ETA chart. Did we get there? No, but I'm gonna look. So here is the yeah, we got there. So here, where was that? It was right here. So if you measure, right, this was your trading range. Now I took it edge to edge, pulls back, and we're staying above the 50%. Look, it's not even 5 p.m. There is still 3.5 minutes, and the market reached its measured move target. So look at that. So you don't have to, you can literally find your small trading ranges, right? Here's a trading range. Extend, extend until you get a breakout. Not going. Breakouts are weak. It's coming back to the 50%. Ooh, breakout. This time, I'm going to measure it to the downside. And this time, I'm going to take the whole, this was the trading range. So I'm going to measure it from here. And I'm going to try to get a target. That's it. That's the target. But what if I, instead of excluding this, what if I take the whole thing? Then that's my measured move. Okay? If you want to go edge to edge, even here. Edge to edge. Breakout, pull back, measured move. Okay, so now I have another one. I'm going to take it from there, edge to edge, maybe. Or exclude the wicks. I always start without the wicks. That's my trading range. I've got a breakout with this bar. Okay. I got a breakout. I want to buy. And even it comes back, it's buying. So I'm going to measure from here to here. This is my target. But first, I take profit at mid. Okay. But the problem here is this. Look, we went up, we came down. That's not where trading range is. Trading range is here-ish. So you should be measuring there. Pull back, breakout, pull back, measured move. Or even if you get that, and then get that, measured move. Okay, so everything is trading ranges. Market first goes into a limit order before it turns into a stop order market. Limit order is your trading range, stop order is your breakout market. So here's another one, small trading range, right? Here's breakouts coming in. That's great. I'm just going to measure that. Only 2 bodies. I could just grab that 1R and be done with it. While everybody's still in that trade and stuck, I already got my money, right? So another one. This is why I exclude the wicks. I may not be getting the full move, but who cares? In this mess, I'll get what I can. Here's another trading range. Maybe this tiny little one right here, right? So I'm going to measure that. Breakout. Yikes. Look how big that breakout is. Do I have enough space to buy? Breakout. It already reached the 1R. Nothing I could do there. There's nothing. I cannot do anything. I can wait for a pullback and buy with a limit order maybe. I would probably let this go. Then I would see, oh, another trading range. Maybe I'll take that one. And where is the breakout? Breakout is right there with this bar. Then it goes to 50%, comes down. Or maybe breakout is here. That's better. So I should adjust my trading range. That's a better breakout. This bar right there. That's my measurement. Or if you want to be true to yourself, then use the wicks. Then the breakout is with this bar. That's your measured move. Same thing is small trading range. I'm only going to take the bodies. Okay. Where's the breakout? There's nothing to the downside, but there's one to the upside. Okay. I'm going for a measured move. Ooh, there's money to be made. I made it. If I put my stop here, then that would be my 1R. Or I'll take that. That's the 1R. So no matter how you measure it, as long as you get the breakout in the right direction and you're entering in that direction, you're going to get some kind of a 1R, if not 2R. But you should be able to make that 1R with flying colors. Okay. All right. I'll see you guys tomorrow, everyone. I think I'm scheduled tomorrow, but I'm not sure. If I am, I'll see you guys in the trade room. Bye, everybody.